Hello guys. How we doing tonight? Now I'm sorry, but that song has to be listened through. If you are what you say you are, then have no fear. It speaks to authenticity and how comfortable you actually get once you stop lying to yourself. We need more music sit aside. Okay, Emil. Okay, so PA reviews will now be instead of being a PA review where we can learn about time and price and how to make money off these markets, will be a music listening session. Why not, right? No, but I'm planning to do some more back testing on the weekend. So some back testing live calls, just have music the whole way. Because the thing is, when I play music, I cannot record the music. If not, I cannot post it on YouTube. But now that the community's a little bigger, maybe we keep the backtesting calls just for the community, not for Discord. So I'll be backtesting for 2, 3 hours. If you guys would enjoy that, do tell me. Do tell me because I do plan on having more of these. But enough speaking about Rise. Let's speak about our beautiful indices. Yeah, I'll run a poll after this call. Good idea, Emil. We just closed the month of September. We are going to start tomorrow. Well, if I'm not mistaken, we do not have, yeah, no, we do not have a 31st of September. So we just closed the month of September. Very nice delivery, honestly. I don't know if Julian's in here, but we might remember where we were saying, oh, well, we could be opening low right now at this point in time when we were trying to frame a bullish reversal. But I was like, wow, that is one hell of an open low, right? What was that? Almost 7%. So definitely a very large downside early in the month, but we retraced with nice delivery and honestly perfect the whole way when looking at a daily chart. We had a few consolidation days near the end, but to be expected, right? End of the month. But now we are starting October. So again, we are looking at the same exact things as basically we spoke of during the outlook a lot. We are looking for structure to be formed. What is structure? Define it. Well, we are looking for one of our monthly extreme to form. So whether that's a high or low. Do I predict it early in events? Well, I said it. I want to see bullish, but I expect we will go down first before going up. So, for example, today I had a mixed bias, but you'll see that we had actually very beautiful delivery. But just to get into price a lot more, and instead of predictions and all that, we'll start looking at today. In our weekly outlook, I do not remember who it was, so I'm sorry for not giving you credit, but I forgot that range. I was actually looking at the bigger range. But for Monday's trading, we discussed about how we could utilize this smaller range that was formed with last week's expansion, so the weekly expansion. And in the discount of this range, you would have had this order block as your objective. Why? We just took out some important external range liquidity, right? As we said, we turned bearish once we hit this fair value gap after taking out these relative equal highs. This is all from last week from the outlook, but I do want to revisit this very quickly. And once we did take this out, we could now frame some retracement ideas. Because as I said, I am still bullish. So any move to the downside for me is a retracement. And short term, even though for the whole week, I believe we're going to refer to some bigger ranges, as I said in the outlook. For Monday specifically, we can look at the previous weekly range. And in the discount, you had your order block as your retracement objective, kind of picture perfect, but do go back to the outlook if you weren't there because this is going to seem very cherry picked if not. Daily chart is clean. Do we need to go in any other time frames? No, but you could refer to the 4 hour. Sorry, I was back testing using the indicator. So let me actually fix the settings here so that it will be a little easier for us once we go down the time frames. So I will just copy it, paste it over, delete the previous instance. Super easy. Looking at this, we have also the weekly power of 3, which let me just remove that as well. Since we just started the week, it is basically the same as the daily. Looking at the PA on the 4 hour candles, what do we see? Well, today we consolidated. And fair enough, right? From the open, all we do is we expand on both sides, search and destroy accumulation to be expected for this specific week. But if we look at ES, there is some strong divergence on the lows, right? Well, okay, so it is not SMT, what most are used to frame divergence, but there is lower time frame SMT, not on this 4-hour chart, but there is divergence, meaning that yes, dug way deeper into this wick compared to NASDAQ, looking at this wick specifically. The main important part is our daily order block, as you can see, formed the low of that specific day. If we go down to the 15-minute and pop open our sessions, why do I see both? Let's remove historical. And, oh, that's why I see both. All right, let's just adjust that very quickly. Awesome. What's the difference between SMT and divergence? Basically, SMT is how ICT defined SMT for me. And what is that? That is between swing points. So it is looking at divergence between swing points. So I'm going to be looking at a swing and a swing. But truth is, for example, lower time frame SMT can be seen on the higher time frame just by seeing one asset retrace into a fair value gap while the other doesn't. So it's just a different way to say the exact same thing. Divergence, meaning one is going in one direction while the other isn't. Truly the same. It is just, I like to use the correct words. And in some cases, it is SMT. And in some cases, it is just divergence, which I don't utilize specifically in my trading, by the way, just to make that very clear. But we had news today. We had Powell speaking at 1:55, I believe. I don't want to say bullshit, so I'm going to go back and visit this. I didn't trade the PM session at all, by the way. We're going to speak on it, but yes, 1:55 specifically, Powell was speaking. So with very conservative rules, you would have waited until that news before engaging with price, and you would have seen a beautiful manipulation to the downside into now what is super far away. Let me just move this closer into our higher time frame point of interest. I'll also remove the power of 3 because currently it's in my way. And that would have given you a beautiful opportunity to long. Would you say SMR and SMT are two different things? SMR and SMT are. SMR is just what people like to call smart money reversal, right? It's just what people like to call the reversal we form in a market maker models. But truth is, everything is a market maker model. It is just a way to define price moving. So a way to define the movement of price through specific phases. So just saying SMR is the same thing as saying reversal. It just sounds better, especially when you're trying to sell stuff. So, oh, I will teach you about SMR. Look at this beautiful SMR at 10 a.m. I like to use real words that have real meaning, meaning reversal. A reversal, I can say that to anyone and they will understand. And as you guys know, this Discord is, I am an ICT trader. That's what I trade. Those are the concepts I train mainly, but it's open to everyone. And using words like this is very cult-like, and I do not like this. My pleasure, Stan. Just get back to price, as we said, right? News, Judah swing, higher time frame point of interest, reaction away. Truly beautiful. 4-hour power of 3 was in line, sure. But as I said, with Powell, I do tend to look at things a little differently because especially when it's late in the day, so you'll see Powell speaking sometimes early in the morning or around 10 a.m., whatever it is, but sometimes it's also in the afternoon. And when it's the afternoon, I expect the day to have sorts of 2 distributions. Now, this might be a little weird to say, but the morning, first of all, we just consolidated all the way throughout London. But the morning will have an initial move, an initial run, which will then go into consolidation, waiting for the news and then run it. A little bit like FOMC has a 2-stage delivery, and FP as well. So referring to these is not useful because it does not happen often. The conservative approach is waiting until after the news. But personally, I like to trade in the morning and wait until the news to look for further opportunities. And if I am still in a trade, I will close it before the lunch session. So I like to trade in the morning as well, even though he's speaking sometimes during lunch, sometimes in the afternoon session. Just wanted to give you guys some insights. I took a trade this morning, which we will be going over. But we're first going to start on this 15-minute chart to spot this beautiful London rain framework. London raid, not London rain. I apologize for that. And right at 9:30, we hit our objective. I feel like I speak a lot about these frameworks, and you guys will basically notice London specifically with a very high success rate, and I did make a thread on it, so we're not going to go in detail about it. But on both assets, it was hit at different times. There was some large SMT, but as I stated, I would not have been trading at this point because I already took the short pretty much. We'll look over it, but very high resistance move, which even then at the end led to SMT, right? We just had both assets needed to take this moment because we were in consolidation. If we go down now to the 1 minute and look specifically, what I'm framing is that you could have been looking for longs all the way to London high. And once London high was taken, this is an important level in liquidity, you could then start looking for short, especially with all the SMT that was present. So we're looking at this point in time where ES is far from reaching London highs. NASDAQ there is some higher time frame SMT at a key point in price, right? Very simple. London high, I understand that liquidity is more important to me than any liquidity, right? Not just it is the most important, London specifically. I'm just saying it is an important level in liquidity, and I need to frame this in my trades. Also, if we zoom in, we'll find some lower time frame SMT right here, which later got confirmed once again at this point on. Anyways, from the point where we have this SMT, we have our higher time frame point of interest, we have our drawn liquidity, as we said, right? Our retracement objective, which is our order block lower. 930 open. What did it do? Open. Due to swing higher, confirmed through SMT, taking out these highs. This is A+ in my book. The only reason why it is not perfect, it's because it's before Powell speaking, and you anticipate that there is a very high likelihood of there being consolidation. For me, that was half risk. I understand the conditions of the markets I am in, and if I get bit, I want to make sure I don't get bit hard enough for it to mess up the rest of my week. Because when I'm full risk and I take a max losing trade, it takes me a whole win that it takes away. And since I do not like to have a lot of trades, for example, in a week, I do average between 2 and 3. Sometimes I go up to 5, which is the maximum amount of trades a week I take. So with these amount of trades, the losses hit you closer. So I want to make sure that when I am in lower probability condition, my risk reflects that. Now, if we look specifically from the point on, well, first you already had SMT, right? So from the point where we take out this high, I do want to be precise with the timing because this is something that I've seen a lot of people need help with. When you're analyzing charts with hindsight, it's a little bit hard to frame because you're like, okay, well, this one is a beautiful breaker. Sure. But when I'm live in front of my chart, I start here. So I'm going to put a vertical line so that it's easier for you guys to see. Right here, this vertical line is the point where I start looking for shorts. And since my model is not trading an inversion fair value gap, I would not have entered here. I'm looking for a breaker block to form. So from this point on, from 936, I'm looking for any single breaker block so that I can be ready to short. When is the first one that formed? Well, you have your range right here, took out the highs of that range, and then went and displaced towards the low from that 954 candle. This forms your first breaker block. Now it is this whole range that is your breaker, right? Let's just say we use standard deviations just so that we can see it clearly. This whole range forms your breaker, but the last down close candle is higher up here. But before forming your fair value gap below, you also formed another breaker block right here, which lined up beautifully with your fair value gap, specifically that whole entire range. But as I always say with these things, I'm going to be referring to the last range that was formed, and that last range is with that breaker block, right? Why is it the last one? Well, this movement formed a range. We broke that range on the highs. So this range I will no longer refer to. We formed a high, we formed a low. We broke the high, I will no longer refer to that range, but this whole trading is inside of this range. So if I'm looking for a breaker, I'm going to look for the largest range that formed the breaker, which is right here if you look at the high and the low. Might be a little confusing. I could prepare some more examples if you want, but I do this in every single one of my PA reviews. I want to use the best standard deviations. From this breaker block, we can see beautiful inversion fair value gap right here. Inversion fair value gap. Beautiful overlapping fair value gap right here. As always, I'm sorry, I'm getting a call. Let me just mute that for a second. I always include the volume imbalance inside of it, giving me a beautiful entry here. What we discussed for the people that were active in general earlier is what forms high probability breaker blocks. For me, it always has to do with important liquidity. So of course, forming at key levels, but this is only half the answer. The other half will be SMT. So if I truly want the most precise standard deviations, I'm going to be referring to the range that formed SMT. Now this is one of these ranges, but the other one is too, this one. Why? Because as we framed, there is also SMT between these 2 points. Oh no, wait, where was it? I think I drew that SMT on my charts, but it's SMT here, which is not interesting to me. Okay, so no, I will be referring specifically to this one. I made this mistake live. I actually looked at the other standard deviations that I had. But no matter which breaker you use to look at overlapping fair value gaps, you'll notice that they always line up nonetheless if your idea is valid, of course. With these standard deviations, nonetheless, you had a clear objective for the short term, which were these perfect equal lows right here within the reversal range, hence why I am talking. So that was clearly an objective. Would I have waited all the way down here to take a partial? Not at all. Why? Because I don't want to leave my trade on for this long. Before we go into that, actually, I should discuss about the stop loss, right? So 3 PD arrays, you have your inversion fair value gap right here. This is 1. Your entry PD array is 2. And then you have your order block above, giving you your 3 PD array stop loss for, oh, the swing high is just 1 tick above. 423 handles, quite a nice stop. Now for my low-hanging fruit objective, well, first of all, for my idea to be valid, we have to flip New York open, right? 9:30 a.m. open, because I'm framing this whole move to the upside as a Judas swing. So once we flip that, I want to see us close through it, displace through it. But before then, I want to be able to take some partials. So my first partial in this specific case would have been the New York Open. If we go with the mechanical approach, right, just for some of you guys that maybe have less experience, I would look at the current range that I'm flipping, right? So this whole range is the range we're trading inside of, and I would look at the first discount in efficiency. I like to do that in a 5-minute chart. When the range is extremely large like this, I can justify going for 15-minute inefficiency. So for example, in this case, it would be this order block. I prefer to do this because when we are looking at an intraday range, quite a large range, sometimes we're going to use fractal ranges within, right? So maybe we could refer to this range instead. So because of that, I like to go to the 15-minute chart, but you guys know all that time frame alignment, I don't believe in it. So it is all telling me the same story. As you can see, the 15-minute order block is just the consecutive down close candles on the 5-minute chart. So whether I use this 5-minute order block or this order block, both targets will be hit. And I like to be conservative, giving me almost 2R, 1.96. Not gonna lie to you guys, I'm not very good with that kind of stuff. I like to see clean numbers, so I would have kept it for, 1 handle more. This is something I'm telling you because I don't want you guys to be doing that. It is very bad. Please do not do it. But I tend to just always take profit 1 or 2 handles below my objective, and it does bite you in the ass. I'm telling you guys because I see a lot of people doing it, so I would recommend that you don't do it. I'm working on trying to fix that, but greed is one of the things that is very hard for me to take care of. I have very high targets if we're talking about amount of money I want to be making, and it is hard to stay on track with this. Remain conservative. But nice, beautiful partial at this order block. And if we held all the way up till the equal lows, this would have been actually a second partial for me. I would have still left, oh, I moved this line, sorry. I would have still left a runner that would have gotten stopped out break even to all the way to this order block. But as I say, well, it would have been stopped out just before break even actually, or no, right here at break even. But that would have been my last runner. For example, if I have 5 contracts, there would have been 2 out here, 2 out here, and remained 1 and anything under 5 contracts, I would not have considered leaving a runner. It's very simple. A runner, my specific rule with runners, I do believe in them. I always leave them on because home runs are part of my strategy, home run trades specifically. All right. So I'm looking for these trades that I have my constant trade, but sometimes there is variance, and sometimes that variance is in my direction. Sometimes I do get 300, 400 handles trade on crazy days where I just caught the high of day. And I want to be able to take that home run percentage, if I can say it, letting your runner run, exactly. But for that, it is very difficult to manage psychologically. So I have very strict rules. And those rules are that it cannot be more than 20% of my position. That is the absolute maximum. So with that rule in mind, it would mean that I need at least 5 contracts. I don't trade micros. I trade minis. So for me to have 5 contracts in a position, it needs to be on a well-established account and that I have scaled into that position. So it very rarely happens, but when it does, I am quite happy with the results. Even if you did not leave a runner, that would have left you 3.78 R at your final objective for a realized R of what? So 1 plus 1.7, pretty much almost 3 R realized. And that is it, done for the day, right? For myself, at least, it was all I needed. So I was done after hitting that. I left my runner on, saw that I got stopped out, did not even reopen my charts to see the news. But we will be speaking on the news. So let me just remove, well, actually, do we have any questions about the morning session specifically? Maybe you guys are wondering why I'm not talking about the long. Well, it's very specific. My bias was short. I'm not considering any longs because any move to the upside until this objective is hit is just a retracement. I don't want to be trading intraday retracements. I'm not seeing any questions about this one specifically. So I'm going to move on to the next setups because we did have a day filled with opportunity. Move on. I will. Now, as we saw earlier, right, we saw that SMT was formed at these highs between the 9:30 a.m. highs, right, close to 9:30, and the highs where on ES we took out London. So it invalidated the previous SMT that we had framed here, but we still have it here. So, that is wrong, sorry. We still have it here. So very, very search and destroy like, if we're being completely honest. That is exactly the profile that was seen. Let me just put this line at the right exact spot, 9:55. Now with Powell, I always suggest to wait 10 minutes after he starts talking because he oftentimes starts slowly and it takes time to build up that liquidity. But anyways, I'm looking for one very specific thing at news, and that is for a Judas swing. Now, this is not what I would like to see as a Judas swing to the upside to then consider a short. But if we are being 100% mechanical with it, it is a fake move to the upside, taking out liquidity, confirmed right after with SMT. So if we are looking entirely based off, let's just see our line, please. If we are going entirely based off mechanically, this is a Judas swing to the upside based on my specific standards. But as I said, not good enough for my liking. Sometimes it's just a question of feeling. And I know that must be weird to hear out loud, but sometimes I just see a setup, and through my experience of looking at so many charts live printout, I see this and I'm just like, I don't like this enough to consider it. But again, I do have to consider the mechanical approach, which because of this SMT, we can treat NASDAQ as if it has taken out this high. And once we trade below the low right here, we form a breaker with an overlapping fair value gap, which allows you to short with the Rise model. Very straightforward. What would be your objective? Well, the same objectives that we had earlier on in the day, which were what? Well, we were looking at current low of day, right? We're bearish. We're looking at breaking the low of day all the way to our higher time frame objectives, which is our order block. We also induced this current low in day, with the morning low, so the low of the morning session. And as you can see from all this, we have built up liquidity around these areas, right? Specifically, we just created a bunch of failure swings. We are failing to head to these. This is a key area, and the lowest swing point is right here. So I want to see price expand through this if I'm looking for anything. So this would be a great partial, even though it is very close to your entry. So if we look at the entry specifically, not on the open, sorry, right at the fair value gap, we look at the stop loss, you have inverse fair value gap, inverse fair value gap, and your entry PD array. You can actually use this order block instead of the other inverse fair value gap because it is closer to your entry. So fair value gap, inverse fair value gap, sorry, and order block above gives you a 13 handle stop. Quite small stop. And if you look, it is just before 1410, so you could have waited for 1410 specifically to enter, which would have just given you an entry that already confirmed through respecting your fair value gap. So still a valid entry. But if we look mechanically, once again, I would have had my partial right at this level, taking out the recent equal lows, and of course our swing point that we formed right here earlier, as we said, this area of liquidity, and giving you a very nice, if I'm trying to be precise, 2.04 R take profit. So already you're in, few minutes later, you're out with 2R, break even on the rest of your position, all the way to current low of day for 5.37 R. And as we said, if you left a runner all the way to the order block, giving you almost a 10R trade. So beautiful result, but as I said, and I stand by this, I didn't like it, right? I was framing a reversal, first of all, to the upside, right? After this objective was hit and seeing all this bearishness, this to me, the best way to frame this movement to the upside is bullshit, right? Retracement, manipulation, however you want to call it. I was looking for longs later on if I was going to be looking for anything, but as I said, I was done with the day. Very beautiful result though. We are results oriented. That was a very beautiful trade. But after hitting this order block, you can now start looking for longs. The only issue here is we did not form anything with the Rice model. Sad to say, but until later on, right, for that final power hour, we did not have an opportunity to enter with the Rice model. And the first breaker block that formed was all the way up here, which is way too high for my liking. And then you had other opportunities, which are a continuation model, which I have actually decided to stop trading. So am I going to be recommending to other people that they trade some setups that I personally would not even trade myself, just because of how, well, they are profitable, but not enough. That's the thing. They take too much time and mess up your consistency too much for their worth. Truth is, it happens sometimes. Was there a breaker? Yes, in a lower time frame. Do I trade the lower time frame? Sometimes I do. In this very specific case, I do not really see the point. You get your strong reaction, you got a retracement to a fair value gap. And here, I'll show you guys just out of spite. You did form a breaker block, well, several breaker blocks, of course. At this point in time, you formed a range, rated the lows of this range, traded back above the highs, retraced into the fair value gap. Would have had your stop right here, almost went to your stop, was 2 handles away before catching the perfect low of day, right? So just, it was there. But for me to have a high probability trade, I like to stick on the 1 minute. And today, it did not give me the entry I wanted. So sad to say sometimes, but I am very happy with the results of my model, of the Rise model. And sometimes it doesn't catch every move. But as the more, the people who come here more often, all right, I see a few faces that don't come too often. So welcome, by the way. But the people that are here every day, they know every single day you have 1 to 3 beautiful setups and always in line with the daily expansion, which if we look at it today specifically, it can be anything. You would say it's that move to the upside, but this move to the upside could just be our weekly manipulation. You had basically movement in both directions. You had, what was it, 200, sorry, 200 handles one side and like 220 on the other, 230. So you had double distribution, I guess is the best way to put it. So whether you framed longs and caught a big part of this move, or you framed short, caught this move, or the move in the morning, you had plenty of opportunities. And only one of these moves could not have been caught with my model, and extremely happy with the consistency it provides. So I like to give you guys insights into that. This is not me telling you you should be trading my model. You should be trading the Rise model. You have to. This is not me saying that. This is me giving you some insights into my psychology around missing moves. When a breaker doesn't form, I have the knowledge to trade this 20 different ways. Why do I not? Because I have absolute faith in my model and in the results that it gives me with my consistency. So I just wanted to give you guys a little insight into the psychology behind that. Before we close this, do we have any questions about what happened today? Not seeing anyone type. I guess not. All right. As I always say, right? Always a good sign because it tells me that you guys understood well. So love to see it, but it's always a little scary when I don't see question. I'm like, okay, did they understand or are they just not talking? Pleasure to have you all in numbers here tonight. Awesome to see you. So much of you guys come here live. And of course, I do these and I record these to put them on YouTube for myself and for others as well. But I do these live for the opportunity for you guys to have questions, right? So no worries about that. Don't apologize for that stuff, DJ. Glad to see you in here as well. Would you take the lunch unicorn? I never trade during lunch. And it's not a question that I cannot trade during lunch. It's a question that the occurrence of models forming during lunch is so small that it is not worth my time. That hour or hour and a half that I am spending in front of my chart will be way more often spent looking at consolidation than anything else if I look at lunch. I like to think that my time is valuable and spend it accordingly, meaning that that's why this morning I took that one trade and was done because I could keep looking the whole day, but odds are I'm going to lose out my profit just because the more time you spend in front of charts, the more emotions you have to deal with. And the second thing is my highest probability, I guess, time window is going to be right after the news, or in this specific case, as I said, with Powell, or on days that there are no news, it's going to be that first hour of trading, that 9:30 to 10:30. So unless I'm there, I'm wasting my time. He's the greatest Shifu. Wow. Waste of mental capital. Exactly. Don't spend your mental capital. You need that shit. When you're trading, when you're doing this hard job, because we're going to be honest, it is hard. I'm not ready to say it's the hardest in the world. You should see some underwater welders, but it is a very hard job on your mental. And the easiest way to become better at it is not to spend more time on it and build that strong alpha mentality. No, it's just spend less time. And all of a sudden, it takes you so much less energy to do that same exact thing. Market open, to first macro, that's it. Yep. Makes sense, Emil. That's how you got your consistency, dude. Very, very straightforward. I like my lunch rates, though. I like my lunch rates. But on that note, guys, we're going to call it a night. Thank you all for coming in numbers here. Love to see you all. And we're going to have a lot more opportunities this week. A lot of PA reviews. So I wish you all luck trading tomorrow. And we'll see each other for tomorrow's PA review. Have a great night, guys.